Hello and welcome to It's Your Business with Mario Toneguzzi on Megapix Media. Joining me today is Jennifer Hunt, who is Vice President of Research for the Real Estate Investment Network. Thanks for joining us today, Jennifer.
Wonderful. Well, thank you for having me, Mario.
All right, well, you folks have put out a new report called COVID-19 Special Edition, Real Estate Cycle Update. Tell me, first of all, a little bit about the report itself and what you folks hope to measure and look at in that.
Certainly. Well, it began with, of course, the pandemic when that began in March, and we recognized that there were obviously, when we look at the economic fundamentals behind some of the key real estate markets in Canada, we recognize that the COVID-19 is obviously having a significant impact on our economic fundamentals and our GDP, which dropped, and jobs and population, of course, with immigration. And so we wanted to assess, and so our first special update was in May 2020 to assess what we call market influencers are having on key real estate markets across Canada. And so now, as we've seen how the pandemic has influenced and affected the economic fundamentals and then the rental market and the housing market, we wanted to do an update. And so this is an updated version. And for the first time ever, we've actually looked at it even as a provincial level, which of course we want to make sure that we're very targeted, but it's good to get a general sense. And then we looked at the key 5 markets in so Vancouver, Calgary, Edmonton, Toronto, and Ottawa, just for making sure that we could get this information out quickly.
Okay, super. Let's take a look at specifically Calgary. What does the report say about the Calgary real estate market?
Well, what we found is that prior to this, so last year, we were seeing really green shoots in Calgary, and we were starting to see that recovery. And the impact of the pandemic has made it drop rapidly, like many markets across Canada, drop rapidly into a slump, at the beginning of a slump. And what we've noticed since May, and now with the new data, the new information, that Calgary, as well as Edmonton, are even further entrenched. So we look at 16 indicators when we're looking at a real estate cycle. And when we look at the number that we've got, Calgary just has more indicators that are indicating that slump component, that beginning to middle of slump. Now, what is interesting though, Mario, is that this is a technical term, because, and we are seeing that, prices are falling in Calgary in terms of housing markets, but what we're looking at is also those economic fundamentals. So looking ahead to see where this market will go. And I know you're going to ask me that question, so maybe I'll just jump there now. So we are seeing that all those indicators are showing that it's going to be a slowing market. It's going to go deeper, and it will, while the real estate cycle, it's very predictable insofar as it's a boom slump, and then it goes into recovery and what we see in regular business cycles. But in this case, with the impact of the pandemic and the economic health being, stimulated, and monetary policy and fiscal stimulation, fiscal stimulus, all these components are really buoying GDP. And so we haven't actually sensed that trough yet. We haven't gotten to the bottom of it. So my sense is, Mario, is that as we look to the future, it will be quite some time that we will be staying in that slump, particularly in Calgary and Edmonton. And that's okay. There is great opportunity, and that's why we're also releasing a brand new tactics table. So it's one thing to know where a real estate market is in its real estate cycle, but what do you do with it as a real estate investor or even a home buyer? And by expanding this tactics table of what to do and how to be in that market, we now have 11 different ways. So there's buy and hold, rent to own, fix and flip and refinance, and I won't go through all of the others. But by expanding it, one can be really more broad in how one uses this information. So, for example, during the beginning of a slump, it's possible to do a buy and hold, but it's not ideal. You want to wait until, obviously, buy when the market is low. But there are, and it's a little bit tricky to do most of these other maneuvers. But a vendor take back, for example, is a really good time to be doing that. And we're going to be seeing, as you've heard in the news and whatnot, from CMHC and the Bank of Canada, and the mortgage deferrals have not really started to materialize yet. but we can anticipate that given the economy and given what we're seeing, that those mortgage deferrals and the challenges there may arise. And so there may be some opportunities for vendor take back and to working with individuals who in pre-foreclosure to help them out of a bind, to help them get out of a problem, and then also as a real estate investor to be able to acquire and grow one's portfolio while the market is down.
Okay, super. Now, as you look into the rest of the year and to 2021, what can we expect from the real estate market here in Calgary? And I know one of the big drivers always is employment, right, and the economy. For real estate, it's no secret that Calgary, like everybody else, is struggling, but Calgary maybe more so because of the oil price situation and the fact that we're probably looking at continued layoffs in the oil patch, right? With recent news of Cenovus taking over Husky Energy, so consolidation there. So what can we expect going forward in the next few months or so?
Well, and as I mentioned, the real estate cycle is a snapshot in time, and it's predictable, but the duration is not. So it isn't a crystal ball. However, as we look at all of those economic fundamentals, as you're saying, Mario, this could be a longer haul than I think most people are anticipating. And so we want to be prepared for that. I mean, in terms of the recovery, even the last go around with the GDP that was only minus, and I say only just by relative measure here, it was a negative GDP of -5 and followed by like a -3, and that was a 5-year recovery for Calgary. It has been taking that long for it to just come out. So this could be a longer measure given that GDP fell even further and the employment numbers are even far greater than the data even reveal itself, because that employment data is difficult to measure and to see. So we're looking into a number of years, I would imagine. However, there's some very positive news in Calgary. And like you mentioned, there's some challenges there with the Cenovus and Husky merger, but there's also some really cool activity that's happening. And I've been looking behind the curtain to see what kinds of diversification, economic diversification. I know the government is really focused on, the provincial government is focused on that as well. And as Calgary and Alberta take on those trends and take on that diversification even further, there'll be some great opportunities in the future. And also, we're talking very broadly about real estate, but it's also important for real estate investors, particularly, to consider their asset type. So, for example, we are seeing a change, whereas before we could talk about sort of generally the housing market. But if we expand that to rental housing and apartment buildings, so multifamily, the time is coming very near to being a very, very opportune time to be investing in multifamily in Calgary. It's still early days, but we're seeing that as an option. Whereas condos, for example, in downtown cores, we're seeing the impacts of the pandemic accelerated some of the trends of moving out of the downtown core already. So really looking at asset type, whereas condos used to be kind of a much more interesting investment, and now folks are really, it's an early day in terms of the trend, and I don't know that it will last for forever. I really don't. I don't believe that downtown cores are dead. I believe that there's going to be this time where there is a bit of an exodus to the exurbs, or exurbs, depending on how you want to pronounce it. And so single family homes in away from the downtown core, where there's more space and there's more bedrooms, working from home and all of those things. So it's a different way to look at it, in terms of looking also at your asset type and how you're investing in real estate during various specific times in the real estate cycle.
Okay, super. Thanks for joining us today, Jennifer.
Awesome. Thank you so much, Mario.
Okay, that was Jennifer Hunt, who is Vice President of Research for the Real Estate Investment Network. And this has been It's Your Business with Mario Toneguzzi on Megapix Media. Thanks for joining us today.